So crypto, always fun. Has always been on an interesting journey. You know, we've seen it go from niche insurgent to institutional mainstay. When there's so much, media coverage chasing Bitcoin's price in either direction, how do you approach giving retail investors what they need to to be responsible in the crypto space?
One thing that served us well internally at Finimize is, if I look at the analyst team, is that we had and still probably do have differing views on crypto. So I know, Carl, you're a skeptic to say the least.
Skeptic is maybe. I'm a realist.
So I like to name myself the realist. I'm gonna name you the pessimist on crypto,
Okay, okay,
and
I'll
we
take it.
probably have optimists on the team, and I think that's really good, and that's really handy and really useful, right? I think it's very good when people have different perspectives, and we can have open, honest debates, and we bring those differing perspectives into our content, into our research. And I think one thing we do really well at Finimize when it comes to crypto content is we provide frameworks. So instead of saying go buy this coin, that coin, and whatnot, which is not the right approach, I think we provide good frameworks on how to approach investing in crypto. So to give some examples, right? There's this big people like to perceive Bitcoin as digital gold. Hasn't worked out well this year at all, by the way. But if that was the underlying thinking, then I dug into this framework on how you can potentially value Bitcoin by comparing it to gold, by looking at the market value of gold held for investment purposes. If you equate that or translate that to Bitcoin, you make an adjustment for the differing risk levels and so on. What could that mean for Bitcoin? I've done crypto due diligence checklists, for example. So before you end up investing in a particular token or in a project, here are 6 questions you need to ask. Who are the founders? What does the project do? Is there utility to it? Where does the yield come from? So if you can stake your crypto and generate an income, through your crypto, you need to understand where that income is actually coming from. People who did that thought exercise, by the way, would not have been burnt so badly with Luna, right? We all remember that. And hopefully, with these kind of frameworks, you avoid making big mistakes. Because I think there's one thing we can probably agree on, you and I, Carl, is that the majority of crypto coins out there are genuinely worth zero, and you don't want to end up you know investing in those. So that's what we're trying to prevent, essentially.
Yeah, I mean, it's really interesting you say all that. Completely agree. And I think one thing that we get asked a lot by partners in the digital asset space is how do you educate investors? And what you've said and what we've learned over the years is that educating by trying to educate isn't going to get you very far. You've got to just accept that modern retail investors are action oriented, are community driven. They're going to do what they want to do. They're going to buy the asset and ride it out. They're going to suck it and see. And so education has to be with that lens and in that context. And exactly as you said, right? People are going to look at altcoin projects because they're interesting and because they're fun and because they're hyped up. How can you help them do it in a sensible way? Give them a framework so that they're not, you know, left out in the cold or, throwing good money after bad day in, day out. How do you help an audience that's becoming more sophisticated, with or without us, make more informed decisions? And yes, you're going to have people coming in at the ground floor every day saying, what is a Bitcoin? However, you also got a group of active investors who are growing their crypto portfolio alongside everything else, who need to make better, smarter, long term decisions.
Absolutely. And I think related to that, we cannot tell you to not buy something, and we cannot prevent that. And ultimately, if you want to buy Bitcoin, you want to buy Monkey Coin, wherever it is, that's fine. If you really want to do that, that's fine. But at least, please, people, don't YOLO on this. Don't take your entire investment portfolio and bet it on a single coin. No, crypto as an asset class, in my opinion, should only be a small proportion of your portfolio to begin with. If you think about position sizing, to me, there are two rules of thumb. The more conviction you have about a particular stock or crypto, etc. And the less risky it is, the bigger the position you can size it at. On the flip side, if you have very little conviction and it's very risky, it should be positioned very, very small.
There's a lot of noise around the SaaS, software as a service doom loop, um, related to AI and quite specifically Anthropic, but the entire AI ecosystem potentially eating software companies' lunch. From your point of view as an analyst, how much of that right now is hype and catastrophizing versus a very real risk?
As always is the case with these big sell offs, I think, again, going back to what I said earlier, things are not black and white. And I don't think you can just generalize saying, oh, this is real or this is overdone. I think some pockets of it is real. I think some software firms will definitely be disrupted. Whereas I think for others, it's definitely overdone because they have significant moats, be it proprietary data, very integrated or strong customer relationships, things that are, or software that's very hard to just, completely wipe code, overnight, for example. So some proper economic moats that will really defend them, and perhaps not just defend them, that, don't forget, a lot of these software companies are using AI themselves to become more efficient, to cut costs, to better target, to increase sales, to make their software better, you name it. So it's a bit odd in a sense where people are selling off some of these stocks, calling them AI losers, whereas I'd argue that some of them are actually AI winners.
Yeah, I also think the timing is always a source of sort of pause. I remember in 2025, the DeepSeek sell-off, where we all decided as investors that DeepSeek was going to take over the AI landscape, and every other route and every other potential winner was now a loser because DeepSeek was so much cheaper and needed fewer chips, etc., etc. But the research and the paper that DeepSeek produced came out months prior to the sell-off, and it's a little bit like that with the SaaS apocalypse. Investors have woken up and decided, today's the day we're going to pull the lever on SaaS stocks because the writing's been on the wall, if that's your view, for months. And so I always find that peculiar, and it just speaks to the nervousness of investors.
Nervousness, and also I would say the financial plumbing, if you look at markets these days and how a lot of these things can become feedback loops, right? The more that, to your point, someone picked up about it, the FT Bloomberg wrote about it, people read it, they start to sell, then FT Bloomberg write more about it saying, oh, there's a big sell-off because DeepSeek, people are worried about DeepSeek. Then you've got all these quantitative traders that purely pick up sentiment signals from news articles. They automatically start to sell, stocks start to go down. You have a lot of people that trade based on momentum.
Which is why, as a retail investor, our long-term horizon is such a massive advantage versus institutions, right? When December 31st hits, for us, the next day is January 1st, and my portfolio continues to exist the same way it did, right? I don't have to report my December 31st numbers in order to be paid a bonus, in order to raise more capital for my fund, in order to keep my job, right? I can afford to have a 5-year view, a 10-year view, even a 2-year view if needs be. But when there are these dislocations or opportunities open up because of these feedback loops, being invested, staying invested, getting invested, that's a big opportunity that institutions just don't have the flexibility necessarily in a lot of cases to avail themselves of. And I'm not blaming Bloomberg, I'm not blaming the FT, right? They know where their bread is buttered. They make all their money from the institutions. And so the headlines that give the institutions clues and give their algorithms clues are fantastic for that purpose. But for us as retail investors, it's creating a false state of affairs or a false perception. Reda, it's been great to have you on. Thank you so much for joining me, and see you soon.
Thank you very much. Yeah, I really enjoyed our discussions, and we'll see you at the next one for sure. Thank you, Carl.